Housing is a controversial topic nowadays, but one thing is for certain. Residential real estate has become a very popular and lucrative investment asset over the last decade. It's not something that we have a ton of experience in. We've done a lot of investing in industrial real estate, and we're now starting to dip our toe into residential real estate. So I'm by no means an expert. So I had to find somebody who was. In today's episode, we interview Chandler Halliburton. He is an expert in residential real estate, both as a real estate broker with over a decade experience and as a landlord with over a decade experience. Chandler also recently grabbed headlines when he netted himself millions on a land banking play he did here in Halifax. Chandler joins us for a two-part series focused on assessing residential real estate investments. In part one, we're going to be talking about assessing existing properties. In part two, we're going to be going over land banking. So you're not going to want to miss this one. I'm Luke Hanson McDonald. Welcome back to Beyond the Family Business Podcast. Let's jump into it. Who are you? Where are you from? And what do you do?
I am Chandler Halliburton, actually, I guess, as my full name. I'm from Halifax. I spent my entire life here. Lived for one brief, fun year abroad, but I am a Haligonian true and true. Having said that, I guess a lot of people now probably associate me more with Dartmouth. It's part of Halifax, but people do like to differentiate, so I've lived over there for a while. I am involved in real estate, so I guess what I do are a few different things related to real estate. My 9 to 5, my bread and butter is just the sale of residential real estate. That's sort of what pays the bills and is kind of my main occupation. But along with that, I really enjoy residential real estate, property management, small scale redevelopment of existing buildings. So I'm a landlord would be another kind of way to look at it, I guess.
And a fellow podcaster.
And a fellow podcaster, though sadly we are winding down the podcast, the Master Keys podcast. If anyone knows of it out there, we are winding it down. I don't know if we talked about that
No,
yet.
we didn't.
Yeah.
Say it ain't so. Well,
Yeah.
You're certainly more famous in that world than I am.
But this is great. I've watched some episodes, and I think this is really cool. And what I like about it is something that has become relevant to me, and we're going to probably get into at some point, is that you have a niche-specific vision with what you talk about on the show, which is so important and something that we, tried to accomplish with the Master Keys podcast. But it also is becoming increasingly something that I'm focused on in my business, is trying to niche down, be specific, have a clear idea of what my brand is.
Yeah, 100%. So you're a lover of residential real estate.
I guess so, yeah.
And you're an expert, I think, at this point, it's fair to say. How long have you been buying and selling real estate?
I've been helping clients buy and sell real estate for 15 years now. And then pretty much as soon as I got licensed to do that, I started buying properties myself. So my initial goal was that I would buy a property every year for 10 years, and I was going to start when I was 25. I quickly realized that buying one a year was great, but it didn't kind of create a snowball effect. It didn't create an economy of scale that made sense. So then I started buying small scale multis, and that's sort of become my bread and butter, sort of your 8 to 20 unit buildings, things like that. And so I've been doing that in earnest kind of for the last 10 years. And along with that, some land plays and whatever sort of has come across my desk. And I do really enjoy it. People say I'm a sucker for punishment because it is a grind. It's not as sexy and as fun as some of the Instagrams make it look. And I don't come from that initially. Like my parents aren't in real estate. I don't know. I got the itch for it, and it's been what I've done ever since.
So what I was really hoping to get into is you have a unique perspective being both a real estate broker or agent, whatever you want to call it. So you know the sales and the selling side really well, but you're also an investor yourself where you own the properties, et cetera. So I guess, first of all, I just wanted to clarify the types of properties you hold are primarily single-family home, or are they multi-res? What kind of residential properties are they?
They're pretty much all at this point small-scale multi-unit properties. So, the smallest one being a 6-unit, the largest one currently being an 18. Yeah, and then kind of most of them around 12. Just that mid-century, that was a really common thing that was being built in the late 60s, early 70s. These boxes, if you've seen one, you've seen them all,
Yeah.
right? They're brick, they're walk-ups, wood frame construction. That I realized is kind of my niche, reimagining those spaces. They're really easy to manage. They're easier to turn over than bigger buildings, lower barrier to entry, all these sort of things that I look for. I also have a couple other, small scale commercial spaces that have been more land hold opportunities. So it's not because I've been interested in getting into commercial or industrial space. It's more so by accident. They were just good land opportunities.
Yeah.
The only duplexes and houses that I have left over are either land plays or an element of sentimentality to them. They were the first place that I bought, or they're near my house, and I imagine my kids one day living there, so I'm just not going to get rid of them because my kids are going to live there one day.
Yeah. Okay. So I think we're going to get into sort of both of those categories there. So starting off, I guess, the first question I really had around the investment side was, how do you assess one of these multi-unit investment properties? So an existing property that you're looking at and you may want to buy.
Yeah. I mean, I was worried about our time constraint when I was looking these over, because that's a pretty loaded question. Really basics, are going to be the ROI, which in real estate terms you kind of refer to as the cap rate. And that is, I'm sure your audience understands that concept pretty well, but just super high level. It's your net operating income relative to the purchase price of the property or the value of the property. And I can tell you, in Halifax, on the purchase side, you're lucky to purchase right now at a cap rate above 5%.
Yeah.
And oftentimes those are with the seller's numbers, which are not going to be the new owner's numbers, because the utilities are low, the insurance is low, the property tax is undervalued. So a lot of the things you see trade out there are closer to 5 or even under 5%. So you can look at cap rate, and that would be what people would tell you. That's the headline thing that you're looking at. In actual practice, knowing that is going to either not be as great as you want it to be in this current market, or just isn't necessarily going to be the be all and end all, or even be especially accurate, I hate to say, you then have to start looking at your other things, recent CapEx into the property, obviously the cliches of location, tenant base, and all that. I can tell you recently the model that I've been primarily involved in, and if we have time for it, we can talk about whether or not that model is still feasible, is the lift opportunity. So a lot of people, myself included, in real estate, we look to continue to roll our equity from one project to the next project. In order to do that, you have to purchase the property, refurbish it, raise that net operating income, then go back to the bank with a higher valuation, refinance, pull your equity out, and repeat. So a lot of the assessment I've done over the last 10 years was based on that lift opportunity. And that is, in really reduced terms, can I take below market rents to closer to market rents in a timely fashion with a reasonable investment that makes that return worthwhile to then pull my money out? Because if you have your money sitting in the property, that's all great, but it can often stagnate you. Because when I say I was starting from nothing, I mean that very literally, because I started in the days where you could buy a property with zero down. So you could start with zero equity for all intents and purposes. Now, I actually purchased the first one with my RRSPs and the commission I made off the deal. So I got into that first deal with no money. And I continued to just lift equity, refinance, buy another one, buy another one, buy another one. So
is that still possible nowadays?
Not really, because the zero down programs, there's a couple sort of versions of it, but they aren't what they once were. But you can still buy, you can still buy a duplex with 5% down. You can still buy a triplex with 10% down, right? So you can do these things, and so you can get into them. The challenge is more so, can you raise the value? And that has become more difficult, one, because the starting prices are so high, right? The market's been so hot that a lot of sellers, regardless of the size of the unit, whether it's a duplex or whether it's 20 units, they want the price as if the rents are already raised. Because at some point they realized, I'm selling this asset, the next person's coming along, raising the rent, capturing all that value. Well, if they're going to capture all this value down the road, I want to charge a premium on it now. And for a while, you could even justify that. In the market now where the prices are inflated and you have a lot of rental protections for tenants, understandably so, and you have restrictions around refurbishing places and getting rental increases, you can't do that model, certainly not as easily as you once could.
Prices can't go up forever.
Prices can't go up forever, but you also, to do the scope of work that really allows you to turn a property over in, say, 24 months, you do need vacant possession of the property. And that's not a popular topic either. I'm just being transparent here for people. Like, if you want to completely change the heating system of a building, completely renovate the building, you can't really do that with people in there. So this is why you saw what people kind of refer to as rent evictions, and you saw these buildings being turned over like that. So this has been a pivot point for me is, well, how do I assess properties moving forward if that existing model doesn't really play out anymore here? Mm-hmm. And, there's that book, I think it's called like Who Moved My Cheese, mm-hmm. right? Where you have to well, that doesn't work anymore. What am I going to do next? And that's sort of where I am at a little bit now. So that was a long-winded question of how do you value properties, but
I think you covered a tremendous amount of detail there. I also wanted to ask, what about when it comes to, so you talked a lot about, understanding the cap rate, understanding what that lift in NOI could be. So how can you, lift rents or reduce overhead costs or whatever else, or operating costs. How about actually assessing the quality of the property? What do you do before you buy a property in order to ensure you're not buying a piece of junk that does require a huge amount of CapEx and does require, a whole bunch of maintenance you don't know about?
Yeah, I think, one, experience really matters. I mean, because of what I do for a living, I'm involved in upward of 100 home inspections a year. So while I am not the most handy person in the world, I'm around that all year. And now, having refurbished a number of buildings, I have a good sense of what I'm getting into so that I can create my line item kind of just with a really simple walk around the property. You also, in a hurry, familiarize yourself with building code and what it actually takes to, say, convert a building from oil to electric heat and all these things. So now I've built that experience, but I only built it through trial and error and surrounding myself with people who already knew it, and then they taught it to me. So I'm a big believer in not only mentorship. Like, I think mentorship is very important. It's probably got the highest return on investment of anything you can do in your business. But until you know something, just surround yourself with people who know that. So I've got the same guys who essentially bailed me out on my first 12-unit building that I bought a decade ago. Mm-hmm. So I got in over my head in the sense that I didn't know what I was doing. Mm-hmm. And these two guys, one who I'd known for a while and one who I sort of met through real estate, they saved my butt on it. There's a GC and a guy who's in the trades. And, I've learned from them, and now I trust them to advise me on some of these things. So I'm in the midst of a purchase now, and I've got my building inspector, who I've worked with for 15 years on the residential side, but he comes from a background of building skyscrapers. I've got my general contractor, and I've got my kind of meat and potatoes, like in the actual grit of it, builder guy, kind of my jack of all trades, and my go-to electrician, my go-to plumber. So we can kind of look at those.
So there's no simple shortcut. You need to have people that really understand these because, in the end, it's a technical assessment of a property, the difference between, understanding plumbing and electrical and your HVAC system and whatever, they're literally different specialties. So you have people that at least have those sort of, specific niches of knowledge that can help you understand that risk tolerance.
Yeah, exactly. And there's also the realization that not every seller is created equally, and that sometimes the best part about a deal can be the person that's on the other side of the deal, right? Because if a seller runs a tight ship, they can provide you with all their existing, suppliers and contracts, a good breakdown of their capital expenditure over the last little while, and that in itself can give you a lot of peace of mind going into it. There's a lot of mom and pop operators around there. Some are really on it. Others just aren't. I'll be the first to admit, I am not the most, I am sort of not the most disciplined and organized with my own bookkeeping, to the point that if I sold something to someone, they'd be like, do you have all of this? I'm like, I got it somewhere, right? But so even the strength of the person you're buying from can make your life really easy. But after that, you have to vet your people, grow with your people, and then trust your people. Because that's the only thing that has made this possible, is now having guys that I really trust.
Yeah. No, I mean, that makes a lot of sense. Like, I come from, the M&A world, and we have an incredible team that, has worked with us for, a decade now. And they come from backgrounds that, are in accounting or in other areas related to M&A. And it really is something that you need to have that implicit trust, that you understand all these different little, telltale signs of what makes or breaks a good acquisition. And so it sounds like it's a very similar thing, that, you got to build those specialties, and it takes time to build that trust and to find the right people, that understand what you are looking for.
Yeah, and you're probably at the point now where you could do it all yourself. Like, you could look at that and be like, I know this on my own, but you'd still probably bring those people along.
Yeah,
right.
Absolutely.
It's an extra set of eyes. It's also,
I don't know if I could do it all on my own. I don't. The people I work with certainly make what I do possible.
Yeah, what I mean, I guess, by do it all along is, like, you can at least know the questions to ask
Sure.
and the things to look at. But ultimately, if they're going to be doing the heavy lifting on it anyway, it's the more you can bring them in on the first day. That was the other thing, buying stuff without telling my crew what I was buying. I could have made my life a lot easier if I brought them in day one.
Right.
And that includes on the financing component, because the financing is so important in all of this. You can find the product, you can have the greatest team. If you can't get the dough, it's a moot point.
Yeah.
Right. Like,
you waste a lot of time and money if you can't get there, right? So, and then that's really the last question I had around this was on the financing side. How do you approach that? Are you looking at conventional financing channels? Are you looking at, some of these residential specific programs that are out there? How do you approach it yourself?
I've always been very conventional with my approach to financing, and it probably slowed my growth. It probably also protected me during the hard times, in the sense that I always had a very strong equity position on all my properties. Even my smallest property, I always had a lot of equity in them, and it allowed me to sleep at night, because people would be like, oh man, are you concerned that you've got, at the time it was maybe like $2 million worth of mortgages. I'm like, no, because I've got 25% equity in there. So, I felt good about that always. So historically, I was always conventional. I would buy with often large down payments. I would complete the work, and many times out of pocket or with conventional construction draws. And then I would refinance at the end, and I would usually refinance back into a conventional product. In more recent years, I've gotten into different forms of financing. And some of it was out of necessity, and some of it was also with, again, continuing to surround myself with people who I was excited by what they were doing, and I was trying to learn from what they would do. So one really common one would be a vendor take-back financing situation, which I didn't do until probably, I don't know, maybe not even until like 5 years ago. I'd never gotten a vendor to hold paper on a transaction. And since then, I've done it 3 times maybe, because some of these properties, especially if they're land plays, they're very difficult to finance. And so without vendor financing, you are tying up a lot of equity, and in some cases on something that doesn't generate any revenue.
Yep.
Right. So you realize quickly that a vendor take back mortgage can be a valuable tool. It can also be not only the only option, but it can be actually a better option than if you have bank financing. If you have the right vendor willing to play ball and willing to help. I mean, I know that's more common, I think, even in the purchase of businesses.
It is,
right?
Yeah, absolutely.
And again, this comes back to sometimes the best part of a deal can be who is the seller, helping you make this deal come together, right? So I got into that. And then I even got into some private financing, especially when rates were really low, when you could even get private money at 6-7%.
Insane,
right? It's insane. And for anyone who's not familiar with private money, the beauty of it is if you can sell the vision and can have some level of proof to your acumen and your ability to pull it off, they just don't ask as many questions. So it's fast, it's readily available. And it's as if you're like myself, who just tends to be shoot a little bit from the hip, it can be a great tool. But I don't love it, right? So
it is expensive.
It's expensive, and now it's gotten very expensive. So take that 6-7%, which is what you could maybe have gotten out there at one point in time, and now you're more likely 12 to 13%. But even going through that process and learning from a lot of guys, because we're here, I'm sure your audience would know we're here in Halifax, Nova Scotia. There's a lot of guys who that's a big part of their business model, and I was very reluctant to do it until I saw the merits of it. And speed can be what kills a project, or lack of speed can kill a project. And so the private money being so liquid and so fast can make a project viable or not viable, right?
Yep.
So if then you look at the cost of that borrowing, if that's what makes the deal happen, then that's the quote unquote cost of doing business, and it's very worthwhile. Like the times I've used it, it's been to great success. I don't love it, but
do you also, as far as the amount of a down payment goes, are you able to get a smaller down payment? So you, instead of doing 25% like with conventional, you can get away with 10 or 15?
So in some cases, yes, because a conventional lender is going to look at the purchase price of the property. So even if you get a great deal on the property, they're going to be somewhat limited as to how much loan to value you can do on that, right? So a private lender is going to look at the actual value of the property. So really easy example, if you bought something for $1 million and a conventional lender says, well, we want you to have $250,000 down on it, but the property's actually worth $1.2 million. The private lender might say, listen, we want you to have 25% equity in there, but we see that you already have $200,000 worth of equity in there. So we only need you to have, say, like another $60,000, and we're good with the overall exposure on this project, right? So there is some flexibility there, but they're not just going to say, oh, we'll do 100% financing on your project. Like it's not like that. The other thing you can do is also borrow against the end value. So again, that same thing. Say you bought this property at $1 million. After completion of some work, the lift that we talked about before, the end product could be worth $2 million there. And in order to get from that $1 million valuation to $2 million, you need $500,000 to complete the work. Then again, a private lender will look at that big picture and say, okay, as long as we have a progress draw schedule and you'll need appraisal check-ins to show your progress, then we will finance you as you go. And this is the flexibility that conventional lenders don't always have.
Yeah. No, that's a good way to contrast the two, because you see the same thing in M&A where there's a lot of private financing that goes on. We don't typically use it, but I know a lot of people that do for all the reasons you just said. So
yeah, I mean, I've had private money before that was cheaper than the conventional money I could get. So in that case, it's like, well, why would I not do it, right? Like the one private I still have left is at 5%.
Yeah, that's incredible.
Right? So I can pay him off early.
Yeah.
I'm sure he would like it if I did.
Yeah.
Not gonna.
Yeah.
Right?
Yeah.
It's just the best money that you can get right now. So
yeah.
But that's not getting that anymore. But I've had ones at 4%. I've had ones at 0% for a period of time. Right? Like, why would you not structure a deal that way?
Yeah.
Right? But if you go to the private market and get a private lender, they're going to charge you double digits right now, and then a fee and all that. Yeah.
Yeah, absolutely. And I think the private debt market has also matured a lot in the last 15, 20 years, where there are many more opportunities to invest in private debt as well, which means then there's more regulation. It's not just some guy lending money. It's a fund that's has to provide a return, which means it's, very regulated, et cetera, which then all the, the fees, et cetera, starts to layer in on top of it too, right? So
yeah, it's been taken out of the shadows a lot. Yeah.
Yeah, 100%. You now have a property, ongoing maintenance. You can focus on the deal aspect of it, which appreciating is incredibly important. If you overpay for something, it's very difficult to make it, make financial sense after the fact. But I think you've done a good job of explaining, at a high level, how do you assess a property or an investment. Once you have the property, the first question is, how do you deal with the property management? Do you insource it, meaning do you do it or somebody who works directly for you does it, or do you outsource it? And, why did you decide that path?
Yeah, so this is my biggest shortcoming, I would say, is that I have never managed to give up control about this. So I have over 100 units and I self-manage. And when I mean I self-manage, I don't mean like I have a company that I run that manages. Like, no. Like they call me when like the toilet thing is wiggly or whatever. You know what I mean? Like,
are you a sadomasochist?
yeah. So all of this is all really fun. Everything I've talked about so far is really fun. The property management is where the proverbial rubber hits the road, and that is the non-fun part. And you can take the biggest landlord in the city or whoever most successful. I can guarantee you the part they don't like is the property management. And so I don't have a great answer for you, only because this is something that I'm continuing to try to figure out. Because that relationship with the tenant has always been important to me, I've struggled to give it up. I also, I haven't found a lot of great property managers out there.
Mm-hmm.
Anyone listening that wants to prove otherwise, feel free to give me a call.
Yeah. I've heard some horror stories.
They, once you understand their business model, you realize that there's not much meat on that bone, right? It sounds like a lot when they're saying, well, we want 5% of gross. And you're like, this is crazy. You know, the building brings in $20,000 a month and you want 5% of gross, and like the phone doesn't even ring. And like, but then when you break it down, the amount of management and the amount of potential work for a relatively small amount, if you have a couple turnovers on a unit, well, by the time they advertise it, take the inquiries, show it 5 or 6 times, go through the references, vet the references, write the lease, collect the deposit, you can understand why they want to show that unit exactly one time. And the first person that is good enough, they're probably going to take. That's never been my model. I have, I think, the best tenants in the city because I slide in slightly below market with a good product. I vet them myself, and then I have far less property management from a like client service, like front of house experience with my tenants because I do all that work up front. But I haven't been convinced that there is a property management model out there that is quite that diligent. But if you ask anyone who has taken a step back from running and working in their business, but rather working on their business, they will say things. I mean, you probably have a better expression or better explanation for this than I do. They've said things like, at a certain point, you have to be okay with it being 85% as good, because no one is ever going to care about it as much as you do. But at some point, you need to step back. So can you live with being 85% as good? And does that actually free you up to do other bigger things? Like if I didn't manage my properties so closely, I probably could have bought 2 or 3 more properties by now. And whatever amount I think I'm saving on property management expenses, I would have made probably 5-fold, 10-fold even in all these years by being able to pursue other things.
I think this is the age-old issue of outsourcing, though, is because what you're describing, the scalability issue, I mean, that's a common problem with leaders in a business, is when you let go of stuff. And you inevitably become an expert in many different areas when you are, an entrepreneur or when you work in a business. And it can be a limiting factor to your upward mobility if you can't let go of stuff. Now, appreciating if you just let go of it haphazardly, you can also have the opposite extreme where the person under you doesn't know what they're doing and, doesn't do as good of a job and it blows back on you. So it is a common problem, but I would say, generally speaking, what I've seen with insourcing as a solution that maybe is a sort of halfway step between or hybrid of the two different worlds you're talking about, is it comes back to that mentorship. And now you probably don't want to have a full-time person on staff, perhaps, and that's maybe a different economic decision. But can you have a person that you then mentor to do that job better than you did? And I know in business, generally speaking, with all with my experience in business and working in a business, there's always somebody who can do, maybe it's not exactly the same way you would do it, but they bring other value to it. And as you said,
great point.
You let go of what is non-value added time, and you can focus on other things. So
there's also been the thing, and I had this also with my sales business, where If I'm not available to do it, then I'm not actually the best person for it, right? Like I may think that I'm the best person to manage that property, but if because of my capacity, my response time and my execution lags, then I'm no longer the best person to do it. And I am kind of at that tipping point. And it's been a struggle for me because this was also when I decided to sell those lands rather than build the project, which I know we're tight on time here, so I can't really get into that. But part of the decision to do that was based on this idea of, do I want to be someone who has a path towards 500 doors? And do I want to be someone who has to manage multiple live-in supers, a full-time property manager, an office with a Xerox machine and an HR department and all that? And furthermore, do I want to leave that to my kids potentially, right? When a lot of what I've done has been creative, individual, entrepreneur-driven type stuff where, it's not that I don't play well with others, but I've liked the individual aspect to it. And I've liked the personal element with the buildings and with my tenants. So there was a period of time where I was like, well, that's a failure to not want to build this thing that's bigger and has people. But it's not. It's just what actually inspires me, right? So
100%. And if you are passionate about what you do, you're going to do a good job. And I completely agree that there's many owner-operators I've met who have only grown to a certain size and had no desire to grow further because they do an incredible job at the scale that they're at. And from a personal work-life balance, from their ability to know their team personally, whatever, they have all kinds of motivations to stay at that size, and they do a damn good job at that size. And there's nothing wrong with that, and endlessly trying to grow for the sake of growth is arguably more illogical, versus if it's do you have real purpose in your life? And I think that's true for any entrepreneur. Certainly any I've ever spoken to is, first or second generation business owners always say when I ask what do they want for the kids, and it's usually they want them to have purpose because people lose purpose all the time. And it's like, so I think you're approaching it in a very logical way, which is if you're going to do a good job, you need to be passionate. It needs to give you purpose. And the scale you're at seems to do that.
Yeah. I'm going to bump up against it here soon, though, if I keep adding some units because, yeah.
Okay. So how about as far as accounting and tax?
Okay.
Do you do that in-house? Do you
Hell
outsource
no.
it?
That's at least I'm smart enough to know I outsource that. I'm probably not the best client because, again, I do things my way, and I've kind of always run that, and I've grown in such a sort of organic way that sometimes like it's like a beautiful chaos. It's like I'd like to say, because that's how nature grows, right? So, but I've got a really good accountant who has a really good bookkeeper who is really good at pestering me to get them everything. But that whole part, and I alluded it to with the financing, like that matters, right? Like there's so much money at stake, and if you can't keep the money rolling, it's all for naught. So again, it's someone who I met initially, but we've become friends and clients. And it helps that every single person I work with is also interested in real estate and or has rental properties. Like my contractors have rental properties. My mortgage brokers have rental properties. My accountant has rental properties. My inspectors have rental properties. So they get it, right? We're all on the same page. We're wired the same way. And I will talk to, my primary lender and actually my accountant multiple times a week. Just like talking about all of these things.
Yeah.
I pick up stuff from them. I like to think they pick up stuff from me. So again, I'm able to just trust that these people get the vision. And they've been a big part of it. Yeah.
And it goes back to you having passion. The fact that some people would say, good God, you're talking to your accountant multiple times a week voluntarily. That sounds terrible. But it shows, again, how much you care about what you do. And so you've attracted people that presumably like that. They see in you what you see in them. And, this constant flow of communication ensures that even in the areas that maybe you're not an expert, you're constantly bouncing stuff off of experts to understand, your own business better, right?
Yeah.
So
Yeah, and it's like I'm very fortunate that I have a group of friends that we're very different in what we do, but we've managed to do quite well, and we come kind of from similar backgrounds. And one of my favorite things in the world is just hanging out with those guys, and we just talk about what each other is up to, and that has been so good for me in my business, but also just so good for me, mental health wise. And I think we're around the same age. Like the number of actual friends you have start to drop off.
Yeah.
Right. So to still have those close friends and to be able to talk to them about this sort of stuff, and them have a familiarity with it at least enough to, reciprocate and be engaged in that conversation has been a huge, huge help. And I think that's another thing that people need to have. Like, you got to surround yourself with those people because it's just good for your business, but it's good for your soul and your energy for sure.
Definitely. Thanks so much for watching. Please like and subscribe. This was Beyond the Family Business Podcast, and I'm Luke Hanson McDonald. Take care.